Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. If you're new to my channel or my videos, we create these videos on a daily basis to give you the information on mortgage rates, what's impacting them on any given day. Sometimes it could be coming from headline news, sometimes it could be coming from economic data, sometimes a combination of the stuff. Sometimes it might be geopolitical, or sometimes if you're we get good news out there, or at least would appear to be good news, and the markets are reacting negatively, and sometimes that sentiment changes out there. And if you're on the sidelines and not really knowing how reason behind it, we're here to kind of bring that to your attention and kind of give you a little bit more of an explanation for it. So, a little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states, so we can certainly help you out with your refinance needs. We can certainly help you out with your pre-approvals and buying, purchasing, financing your next purchase. Um, but we're also here to answer any questions you guys might have regards to whether it's programs available out there or mortgage rates that's out there. Please feel free to use this as a reference. We're here to help you guys as well. We just like to be able to extend a hand to you folks. Um, Without further ado, we'll jump right into it today. This week, the big topic this week, for the most part, will be inflation data because we'll get the CPI and PPI report this week. The CPI will carry more weight as that's consumer driven. And then we also got retail sales that will be coming out as well for the month of December. But today, they didn't. MBA usually releases their mortgage loan activity report, but today it didn't seem like it was released as of yet. Haven't seen numbers on it yet. But the big thing today will be a Powell renomination. He's the Fed chair. He's getting kind of sworn in again for his second term as a Fed chair, and of course he's talking a little bit about what the direction of where the Fed's going. Now, there's been a lot of talk out there of late from other Fed members saying that they feel they should reduce uh, their balance sheet quickly, aggressively, especially with higher inflation. They don't want to be. They need to protect themselves, and so that leads into maybe going from a passive to active. But Chairman Powell, during his address, basically had stated that they have not yet talked about that yet. So that's something that's not before they even get into anything. It'll probably be maybe 2 to 4 uh, meetings before they even discuss anything regarding active or passive uh, uh, balance sheet reduction. So we'll have to kind of wait and see really what they're doing. Before we were kind of under the impression that they're going to be passively doing it, which means that when they come to the holdings that they have, like mortgage-backed securities or yield or treasuries, when they come to maturity level, they usually cash out and then kind of go off the books, and then they take that money and reinvest it into new ones. Now, the passive means that basically after they mature, they don't reinvest that money. They hold off. They hold off on any further purchases. Now, actively is meaning that they will not only wait to do the passive, but they will also sell off other treasuries as well as mortgage-backed securities and stuff. So we'll have to kind of wait and see. Probably be later in the year, but right now there's speculation out there that's going on, and of course the big talk lately, the spike in inflation. If inflation's still spiking further, how much more of a spike are we going to see? And that's a big concern right now. So, right now, let's go ahead and take a look. Stocks were down quite a bit earlier this morning, but did rebound, especially after the nomination. Kind of everybody was kind of in the same boat. Same thing with mortgage-backed securities. As you see this little wick down here, we were down much further. Um, Here's kind of the day chart here. I see we kind of went downwards. We had the Fed nomination meeting, and then since then we've been kind of working our way upwards since then. And some lenders have been coming out with a little better pricing result because sometimes when they came out with the pricing, it was down here, and as a result, with the better pricing, they came in pricing. But overall, our pricing should look pretty close to where we were yesterday. There's not a big difference from where we left off. We're only 8 basis points higher than where we left off yesterday. It's not quite enough to improve yet. Get over time today, perhaps maybe we will, but as of right now, pricing should be looking more like what we saw at yesterday's close, pricing wise. Now, the thing is, hopefully we found a bottom here because right now If you look at treasuries, it seems to be that we found a good top here. It seems to be finding its capped around the 177 level, and you see here, it's tested a number of times and it hasn't been able to break above it. Whereas we keep going lower and lower and lower here in terms of mortgage-backed securities. We're hoping that we can find some type of floor that will hold it, and so we can get maybe a bounce upwards and regain some of the loss that we points here that we've been facing here. Again, that's pretty much where we're at. Mortgage rates are about the same as we're currently. Mortgage rates are about where we left off yesterday. They did come in a little. Some lenders came in with worse pricing due to the timing that when they came out with their pricing when it was down here. But since then we regained a lot of that and are in positive territory finally. And we'll have to wait and see if we found our bottom here, just like we did with our treasuries. Now let's go ahead and take a look at the conforming limits national average for mortgage rates. They do, and keep in mind they do have points already included with them. We'll start off with the 30-year fixed which came in at 3.64%, and then if you look at 15-year, it came in at 2.87%. If you follow my videos, you know that rates don't come one size fits all. They do. There's a lot of variables that go into it, into pricing a mortgage rate, and hopefully that will give you some indicator. So if you guys need a rate quote, please feel free to reach out. We're here to help you guys out. But we're coming to a conclusion of our video. If you guys like these videos, please help us out and smash that like button. We greatly appreciate that, and share. Again, if you guys got questions, please feel free to reach out. We'd love to be able to help you guys out. You guys have a great rest of your day. Thanks so much for watching. We'll see you in tomorrow's video. Bye-bye.